Hey! Hi guys, and welcome to Macro Markets. This is Marcel Pechman, analyst and writer at Cointelegraph. I'm a veteran stock markets and derivatives trader, and I'll be bringing you the impact of macroeconomic news and events on the crypto space. On today's show, May 5th, we'll start by discussing the PacWest Bancorp, whose shares plunged 44% yesterday, and the price decline has been ongoing during the banking crisis. First of all, what is PacWest? Created in 1999, this Los Angeles-based financial institution is fully licensed and has over 60 branches across the state. The bank holds over $40 billion in assets, although 80% of their lending portfolio has been assigned to commercial real estate and residential mortgages. The issue? As usual, rising interest rates. Those financial institutions issued 5, 10, 20-year loans when the rates were below 2%. So liquidating those assets right now would create a huge capital shortfall. So you can see what happened to the shares. They started the year in February at $50 and are currently trading near $3. So a huge downswing, about 93% since February 22, and just in 2023, the drop has been of 86%. Wait, aren't those institutions covered by the FDIC? Not really. First, the FDIC only holds $128 billion. That's not counting potential losses still looming from the recent bank failures. And what's the total underwater position from banks in bad loans? $600 billion in the US, and that does not include derivatives. But the US Treasury, the government, has been bailing out every one of the latest 3 bank runs or bankruptcies, including Silicon Valley Bank, Signature, and First Republic Bank. In SVB case, Silicon Valley Bank, losses are estimated at $20 billion. So a single bank would lose 15% of the total FDIC deposits, their capacity. The US Treasury has been helping in 2 ways. A, handling money to cover the FDIC losses when taking control of the failed institution, so the emergency loans. B, sending the bad debt, the bonds with unrealized losses, to the US Treasury in exchange for liquid government bonds. So basically handing out free money from taxpayers, obviously. So first things first, what is the impact for Bitcoin if PacWest fails? Well, in theory, the more people realize how failed the banking system is, the better for scarce assets. That's why gold has just flirted with its all-time high, trading above $2,000. You can see that gold touched $2,050 back in March 2022, and it's just resumed to the same level. So investors of gold, which is considered the ultimate safe haven asset, which doesn't pay any dividend, people buy it because they are scared of the devaluing of the US dollars. It just hit its all-time high at $2,050. In percentage terms, the gains, gold over the last 6 months have been 25%, which is an astonishing move for an $11 trillion asset. So why hasn't the same upwards movement happened to Bitcoin? Well, the government has been reassuring investors that everything is fine and making sure that bigger banks buying the failed institutions are getting well paid for the job. For example, JP Morgan estimates $8 billion in profit by acquiring the failed First Republic Bank. Will the $600 billion in unrealized loss from the banks ever come to light? Most definitely no. The bank only has to take the loss if depositors request their money, and judging from what we've seen on PacWest, that's not the case. The semi-failed institution saw an increase in deposits last month in April, despite all the rumors and the stock nosedive. Bitcoin's value will become crystal clear when the market realizes that by masquerading the bank failures with bailouts, the US Treasury increases the necessity to refinance its own debt. And as the interest rate increases, so does the amount it needs to pay for the bondholders. So the US Treasury will be paying more interest on their debt over the following years. The cost of the debt increases, and the total debt has been spiraling out of control. So in essence, the US dollar will continue to devaluate versus scarce assets. In the end, Bitcoin will most definitely win, although this can take years. On to the next topic. This time we'll discuss the oil prices. As the energy commodity traded down 17.5% over the past 3 weeks. We tend to create very simple economic models for oil price, given that the OPEC creates a cartel. They operate as a cartel. But the truth is, they are responsible for only 50% of the international traded oil. Moreover, with the restrictions applied to Russia, much of their oil has been diverted to other regions, including China and India, where the product is either refined or simply reshipped using a different vessel. If we analyze a longer time frame, oil price peaked at $120 in June 2022 and has been declining ever since, although it seemed to have stabilized near $75 earlier in 2023. The US has been depleting its strategic oil reserves to its lowest level in 40 years, which drastically negatively impact the global demand. So the US government is forcing the oil prices down. We're not discussing why they're doing that, but by depleting their reserves, so no longer buying oil from foreign countries, they're reducing the demand. Consequently, it forces the price downwards. But more importantly, the industrial demand could be flattening due to the lack of economic growth, while the oil production, especially the non-OPEC countries, may have increased production to avert the crisis. So, what's the take for Bitcoin and cryptocurrencies? Should we be following gold to an all-time high, or are we doomed to suffer the weaker economic perspectives as oil prices? Here you can see on the chart that oil prices plunged from $83 to $68 in a matter of 3 weeks. You want to know the truth? If we're going to follow gold to higher all-time high or oil price to a 12-month low, no one knows. Bitcoin can be traded as a hedge for the banking system for the crisis, but other investors might value it as a risk-on asset, something akin to tech stocks in the past, although presented in the form of commodity. So it all depends how investors perceive Bitcoin's risk. One thing's for sure, if the US government doesn't get too greedy and take the opportunity to replenish their strategic oil reserves at $70, that would take some burden off the Treasury's shoulder, which is a desperate win that they need so much right now. A quick recap of today's macro market show on Cointelegraph Markets and Research YouTube channel. A. PacWest Bancorp might be relatively small, with $40 billion worth of assets, but US banks have a whole worth of $600 billion in unrealized losses. The FDIC insurance can't cover anything remotely similar, as Silicon Valley Bank alone caused $20 billion in losses. B. Gold might have hit an all-time high, but oil plunged 17.5% in 3 weeks. This might signal a weak economic activity, which in turn could be negative for risk assets, including Bitcoin. Not everyone interprets cryptos as scarce assets. Well, that's it for today. Remember to like and subscribe to the new Cointelegraph Markets and Research YouTube channel.